Hey guys, Alex Late here from Try and True Mortgages. Just for our webinar for Canadian professionals, going to go through the webinar and really just do a deep dive into what kind of options we can provide for Canadian professionals. So that's the firefighters, the police officers, nurses, teachers, doctors. If you fall into that category, you're in the Hamilton area. Definitely this is something you're going to want to watch because we have some valuable information for you guys specifically. And let's just jump right into it. Okay, so like I said, I'm with Trend True Mortgages. This is Alex Late. This is our webinar for how to purchase a home as a Canadian professional. There will be some information in here that if you are a Canadian professional already who already has a home, this information will also be relevant to you because there is options for accessing home equity, refinancing, and doing other things there. So, but I hope this helps whether you own a home or not. I think this information will be very useful for you. Okay, so first and foremost, who is this for? So like I said earlier, full-time employees who are on salary. So those are your teachers, your accountants, professors, managers, and engineers. Full-time employee who are hourly. So we have nurses, police, correction officers, firefighters, lawyers, doctors, paramedic, and dentists. Of course, for some lawyers, doctors, and dentists, and chiropractors, it's not necessarily hourly for all of those situations. Some actually might be salary, but a lot of times they are considered self-employed hourly workers as well. And then part-time employees as well. So this is your nurses, police officers, correction, all of the ones I really had stated earlier, who don't necessarily work or aren't considered full-time, but may get full-time hours or might just get the part-time hours. So first and foremost, just want to get into a little bit about who we are at Tried and True Mortgages. So Tried and True Mortgages is a mortgage team providing financing to Canadians. So this includes myself, as you can see in the photo here, and Aaron Porcaro. Aaron Porcaro is a longtime mortgage agent, been in the business over 5 years, in finance over 10 years. And myself, I've been in the mortgage brokerage industry just over a year, but have been in finance over 4 years. So combined, we have a lot of knowledge and a lot of experience in the industry providing mortgages to Canadians. Our team, who does it consist of? So first, as you can see, myself, Alex Late, I'm a mortgage agent. I'm a partner in the business. Aaron Porcaro is a managing partner in our business. Again, he's a mortgage agent and lead agent on our team. And then Shannon Tylee is our operations coordinator for all of the logistics and administration and so on. Just a few client testimonials, just to give you guys a little bit of a background of what our clients think of us. Don't, can't just tell you, oh, we do great work. I just want to show you that our clients actually do what our clients think of us and what we've done for people in the past. So first we have from Angela, highly recommend, recently bought and sold, and Aaron was amazing to work with every step of the way, very helpful and knowledgeable. He walked me through everything to help me understand all of the steps. He was there to answer all of my questions quickly and all of my anxious emails to help me take the best route possible. Aaron was an absolute pleasure to work with and made me confident with all of the decisions. Would 100% use him again if needed. So first, just about this testimonial. Yes, this and all of my anxious emails. That statement couldn't be more true, specifically when you're purchasing a home. Let's say it's your first home, even if it's your second home, third home. The process is not easy, but we like to try to make it as stress-free and reduce the anxiety. So yeah, we try to reduce all of that, and this couldn't be more true. All of the anxious emails. Second testimonial here from Alicia. Need a mortgage underwriter? I'll look no further. Alex Slate was extremely helpful at getting us the best rate and keeping us on track with everything we needed to submit. He's very easy to speak to and outgoing throughout the process. We have already recommended him to other family and friends and family. So yeah, we pride ourselves obviously on a few things, but one of the most important things, at least working with a mortgage agent, is that we really stay on top of things. And with tried and true mortgages, we like to be very efficient and know that everything, even though we know the process inside and out, a lot of times the clients, it might be their first time doing it. So you might not necessarily know everything that you need to submit or all the information that we need to collect. So we really try to make it as easy as possible and make it easy for you guys. And then just the last one here from Andrew. Alex is incredibly knowledgeable and made the mortgage approval process smooth and efficient. He answered every question we had every step of the way. Highly recommend these guys to everyone. So just the third one there. Alrighty, so now that you know a little bit about the background of our team, Tried and True Mortgages, what do we actually provide? So our services include home financing. So this is if you are purchasing a home, we will be able to provide the home financing. So the mortgage, line of credit, whatever you need, up to 80% or up to 95% if you're doing a default insured high ratio mortgage for somebody purchasing a home, right? So purchasing a $500,000 home, you have a $100,000 down payment, need a $400,000 mortgage. That's what we have access to, and that's what we help you obtain that financing. Refinancing. So this is for people who already own homes. Let's say again you have a $500,000 mortgage, and you have only a $500,000 home. You only have a $100,000 mortgage. You can technically refinance your property up to 80% of the value, so up to $400,000 of a mortgage. So you can refinance and take that equity out, which leads me into our next one, the equity takeout. So equity takeout is pulling the equity out of your home to use it for other things. And then debt consolidation. So again, these three are all similar. They all sort of compound. Debt consolidation. Let's say you have a credit card here, a line of credit there, a car payment there. All amounting to $2,000-$3,000 in payments. When you try to refinance and you do the debt consolidation, use some of that home equity, you can actually consolidate and potentially take that $3,000 payment down to $1,500 or $1,200 or $1,000 by amortizing it out and refinancing. So there are a few other things you can do in those, but those are our four main services. We do offer services all across Ontario and in some other provinces. Mainly it is in Ontario, specialized in Hamilton, Ontario and surrounding areas, so Stoney Creek, Burlington, Brantford, but we can finance all over Ontario and some other provinces. Alrighty, so back to the employment types for who this is for. So really there's 4 employment types that we will be going over in this video or in this webinar. So first and foremost, we have full-time employees, so salary. We have full-time employee who are hourly. We have part-time employees who are hourly, and then we have business for self. So business for self would be your doctors, your lawyers, your chiropractors, your dentists. Not all of them necessarily are business for self, but a large majority of them are. Okay, so if you are a full-time employee who is salary paid, really listen to this slide here because this is super important for you guys. Now, in terms of getting actually financing, it's not always about everybody wants to be able to get financing. Everybody just wants to be able to snap their fingers and they're approved. But what are actually some of the common obstacles we see with Canadians and with the full-time employees who are on a salary? So first and foremost, just got a new job. This happens all the time with us. You're a salary employee, but you may have moved to a different position because the wage was higher, or let's just say you're just out of university or college and you just got the new job. One of the most common obstacles that we run into, but there are ways to get over it there. Secondly, small down payment and can't earn more to save more. So what do I mean by this? A lot of the times, if you are a salaried individual, let's just say like a teacher, there's no overtime per se, right? You can't work an extra 12 hours a week here, an extra 24 hours a week there. Your salary is what you get paid. So a lot of the times, if you're renting, If you already have bills to pay, you don't have the ability to save that little bit of extra to be able to put as more of a down payment. So we do have strategies in place to be able to help you with that as well, and we'll get to some of those later on. And then lastly, overtime income but no 2-year history. So some of these full-time employees who are salaried can obtain overtime income. Let's just think of, for example, nurses. Nurses are a great example, or police officers. They might be a salary, but have the ability for that overtime income. If you don't have 2 years history, a lot of times people will come to us, our clients will come to us and say, well, I make 80,000 a year, but this year I made 100,000 because I did overtime. Without 2 years history, we can't show that that's a consistent income to the lenders, and that's why this is one of the more common obstacles, specifically with salaried employees. But again, there are ways to get around these and to overcome these obstacles. Alrighty, so go next. So full-time employees who are hourly. So this is going to be your firefighters, your nurses, your police officers, and all the other ones I mentioned earlier. What are some of the common obstacles we see with hourly employees? So first off, this is probably the largest one we see, and I completely understand this. I used to work in a hospital as well. Your hours are all over the place. So work hours make it difficult to start application. This is so true. If you're nights one week, days the next week, afternoons the next week, it can be difficult to first off just think about getting any sort of pre-approval. Think about, um, I want to purchase a new home, or I want to stop renting and purchase my first home. When you're all over the place, it's hard to even um, to start thinking about that. So that's one of the biggest articles, or obstacles, I should say. And we have ways again to get over that. Secondly, pay stubs. So pay stubs is something we have to use to verify your income. A lot of times pay stubs show weird hours. Uh, this is just because in some situations, let's say you're a nurse or a corrections officer, you might do 3 days on, 2 days off, or 2 days on, 3 days off, and your pay stub might show 84 hours, 78 hours, those type of things. And then lastly, a lot of full-time employees, they might get some lieu pay, and most of the time we can't actually use this in an application, but there are ways to leverage these hours in other ways on the application. Alrighty. So then we have part-time employees who are hourly. So what are the common obstacles here? Common obstacles we see here: pay stubs vary drastically. So it's similar to the full-time employee on that regard, but the with part-time is, 1 week or 1 2 week period, you might have 80 hours you worked. Next, you might have 22 hours you worked. So that is one of the biggest obstacles probably we see with part-time employees. And then secondly, that the hours aren't actually guaranteed. Sometimes they are. Somebody might have a 25-hour guarantee, minimum guarantee. Sometimes you might not, though. Especially if in these roles you are a casual position as opposed to like a full part-time position. You might have casual, so it might just be when they call you in. And then lastly, this we do see this from time to time: work at more than one location. So this happens with nurses who can work at multiple different hospitals. Unfortunately, instead of just working at one hospital full time, they might not be able to get a position there, so they will work at different hospitals. So there are ways to leverage that income, the, from both hospitals, or even more than two. But it's just a common obstacle that they tend to see. Alrighty, and then lastly, here we have our business for self. So this would be your doctors, your dentists, your chiropractors. Some of the common obstacles: short time in industry. So let's say you just came out of university or medical school, or dental school. A lot of times, you don't even have 2 years history of income to show, or your practice is just new. We do have lenders and we do have programs to help overcome those situations. which is one of the most common obstacles we see with them. And then secondly, large school debts. So everyone sort of has this. You can't really get around it, especially if you are in these fields, going through university for an extra 4 or 8 years, whatever it might be. You're going to have a large amount of debt, and so there's ways that we can sort of work around these debts and explain to lenders what we're looking at. And then minimal down payment. So you just this sort of goes hand in hand with large school debts. Most of your money was going to pay for school, so you didn't have a chance to actually save for a home. So the minimal down payment, we would look at alternate ways to get you financing there. Okay, so this is what we call our approval triangle. So for any of these scenarios I just listed, so the full-time employee salary, full-time employee hourly, part-time hourly, or the business for self, there's really 2 out of 3 things that you need to be able to get an approval through one of our lenders that we offer. So the 3 main things anybody will need to get an approval is, first and foremost, a lot of you probably heard of credit score. So your credit score is super important in Canada. It basically tracks how well you handle debts and how well responsible you are with borrowing money. And so the lenders, when you're looking to purchase a home or even refinance, will look at, is your credit score 500? Is it 700? And why is it there? If you borrow money and pay it back on time, pay it back in full, then you're likely going to have a better credit score. But if you do have delinquencies or bankruptcy or consumer proposal in the past, then you're going to have lower credit score. Secondly, we have down payment and home equity or home equity. So if you're purchasing a home, you're going to have a down payment portion. If you already own a home and want to refinance, that's where you could have considered home equity. Down payment in Canada, the minimum down payment that you could put is 5%. So you at least, in other words, you have to put 5% down. So let's just imagine that, again, you're purchasing a $500,000 home. You would at least have to put $25,000 down. You can't get around that. You can't go under 5% down. And then you can obviously put more than 5% down, up to obviously 100%. That's just purchasing the house outright. But the most common that we see is 20% down. Once you get above that 20% mark, you can avoid what's called default insurance. And then lastly, we have income. So your income verification, whatever the types of income I showed you before, specifically for professionals, the income they're looking for a consistent income. They're looking for a lot of times 2 years history, and are we able to prove that income for the lender? So I'll just touch a little bit more on income and credit score. First and foremost, income for those that are salaried employees, what we'd be looking for is a pay stub showing your payment plus a letter of employment outlining how much you're going to get paid and over the course of the year, how you get paid bi-weekly, etc. And if you are on any sort of probation. So the probationary period, let's say it's 3 months or 6 months, will a lot of the time deter you from getting financing, because at any time you could technically be let go. But after that period, we can utilize your salaried income that it shows on your letter of employment to be able to use on the application. Obviously, the higher the income, the more you can get approved for. When it comes to income, we actually use gross income. So not after tax, we use gross. So let's imagine that you make $100,000 per year gross. That's what we use on the application. We don't take off the taxes and then use that. We use straight gross income. When it comes to the business for self professionals, such as dentists, doctors, etc., this is where you have to get more into a conversation about what you're claiming on your taxes and what kind of income you're paying yourself. Some professional dentists, doctors are going to be paying themselves dividends. Some pay themselves salary. Of course, there's tax advantages to both. Or there's tax advantages to having your own business, I should say. And so we have to really look into that. And then we have lenders who will lend accordingly based upon what kind of income you're providing yourself, and we leverage that with the lenders. And then second, I just want to talk about the credit score. So your credit score, like I said, is super important, but it really goes hand in hand with your income, because if, let's say, you have $100,000 income, imagine you do, but on your credit you have a car payment, line of credit payment, credit card payment, those obligations, the monthly obligations we call them, will reduce how much you can get approved for. So even if you have a $100,000 income, which is a great income, if you have obligations that are $500 car payment, $200 line of credit payment, $200 credit card, it's going to reduce how much you can get approved for. So that's just something to think about. It's really something to think about when you're looking to get a pre-approval and planning to purchase a home. With this approval triangle, we have a rule where we say that as long as we can satisfy two of these three factors, we should be able to get you an approval. So for example, if you have a strong income and a strong credit score, but have a low down payment, then we should be able to get you approved. Let's say a low down payment might be you only have 5%. Well, 5% means you're going to have a larger mortgage. So as long as we can show that you have a good credit score and solid income, we'll be able to get you approved. Again, same thing works if you have a strong down payment or strong home equity and a strong credit score, but a low income. We have lenders who will lend based on equity lending only, as long as you have a good credit score with it, or lenders that are less risk averse, and they will actually their ratios for what we use to get you approved, they're willing to go higher on the ratios. So that's the two there. And then there's the third scenario where you have a great income and a great down payment or a good home equity, but your credit score is worse. And your credit score could be down for whatever reason, right? Missed payments, late payments, whatever the case. So we also have lenders who will look at your income. We can prove that you have a good income, prove that it's consistent income, and then show that, okay, we have a large down payment or we have a lot of home equity here, but we have a rough credit score. We can work around those. And then we actually have ways as well to not only get you approved, but then also increase your credit score in 6 to 12 months. And then you're basically satisfied the entire triangle there. So that's our approval triangle. And just remember that you need always two of the three things to get yourself approved. Okay, so whenever you're doing a home purchase or a refinance, they're very similar, but there are two different pathways for the entire process. First, we have for home purchases. You want to do your pre-approval first and foremost. So it's vital that you do the pre-approval, because the pre-approval is we're gonna look at your current situation, your credit score, your income, your down payment, determine how much we can approve you for on a mortgage basis, and then from there we can tell you how much you can actually offer on a home to purchase. If you do this backwards, and let's say you go and offer $1 million on a home, but we can't actually approve you for whatever amount of mortgage you needed, you're going to be stuck in a very, very terrible situation. Unfortunately, that has happened where people have come to us in the past and said, oh, I put an offer on a home, never talked to them before, never did any pre-approval, and then we can't get them the financing because they were never eligible for that amount anyways. So you really have to watch that and do the pre-approval first. Pre-approvals are super easy. Few documents here, complete online application or telephone application, and then we'll get you the pre-approval in 24, 48 hours. So it's not like it's a week or 2 week long thing. The sooner you can get us the documents, as soon as you can get us that information, the sooner we can get you the pre-approval. All right. And then, so after that, you want to put an offer on a home. So you're going to get pre-approval. Okay, now I know I can afford a $600,000 house with my condition. Put an offer on a home, gets accepted. Then we actually, after we have the pre-approval, we're going to set up the financing. So we're going to take the home that you purchased, take all of the information from the home, the property taxes, the square footage, all the information, send it into the lenders, get the final approval from them, get the interest rate that we can lock in for you. go from there. And then you're going to finalize the purchase. Finalize the purchase just means you're going to set the closing date, and you're going to meet with your lawyer, do all the legalities of it, finalize the purchase. And then we have refinancing. So refinancing is different than the home purchase because refinancing, you already own the home. So you're just going to start a mortgage application. You don't do any sort of pre-approval. Start the mortgage application. We're going to set up the financing for you. So we're going to look at all of your options. Again, we will need your documents. We'll need your income information. We're going to go through all that, find out where the best rate and the terms are for you. Remember, it's not always all about rate. It is about terms as well. And then set that financing up. You're going to finalize with your lawyer, go sign, get everything done there. And then you're going to pay out your debts, pay out the old mortgage. You've refinanced, and now you have no terms and conditions on your mortgage. Just a few frequently asked questions here that we get often. First, we have, how do I improve my credit score? Improving credit score is really, there's a few main things that you need to watch for. You need to make sure you're always making your payments. You need to make sure you're making the payments on time. And then also you need time. So, you can make your payment 1 month, but it doesn't mean your score is going to go from 500 to 700, excuse me. You need to really be able to show on a consistent basis that you can make payments and be responsible to your credit. Secondly, can I get approved if my credit score is bad? We get this one all the time. Like I had said back in the approval triangle, if you have two of the other factors, then we should be able to get you approved there. So yeah, there is ways to get you approved with a bad credit score, but it's important that you have those other two factors first and foremost. I was full time but went part time. Can I use my full income? This is a tough question, and we do get this from time to time. We can show a 2-year history and that's consistent, even though you went part time, and we can show that you're still sort of getting that income coming in, like you've worked a consistent 80 hours or so, then we should be able to get you approved. But if you were full time and now you went part time and you're making half the income, likely we can't use that income. So you can still get you approved, just for a lesser amount. Going on maternity leave, can I still get approved? So this happens a lot with professionals. Thankfully, a lot of professionals have great maternity leave options. So with maternity leave, what happens is, as long as we can show your income over a certain amount of time, if you're doing 12-month approval, generally we can use your entire income for the approval. Or so I should say 12-month maternity leave, we can use your entire income for the approval. But if you are doing an 18-month maternity leave, then they'll reduce it by a certain percentage. The lenders will, of how much of that income we can use. Okay, so next steps. What should you guys do next? For any of you Canadian professionals that are listening, where to go from here? So first and foremost, if you're looking to get pre-approved, let us know today. We can start the application with you, get everything set up. If you want to increase your credit score, if that's something you want to do right now, you can download our free credit score guide. The credit score guide we have for Canadians, it really is just like, it gives you all the ins and outs in credit, and then it also is a checklist for you to be able to know where you sit now and then what you need to do in the future. And then if you have more questions, check out our frequently asked questions guide. This guide has all of the questions we ever get and anything related to mortgages. So those are all there. And then if you guys want to learn a little bit more, we're going to be having, I'm just going to go in a few more minutes in our members only section. All you need to do to be able to get into this members only portion of the video, go on our website, become a member of the website. It's absolutely free, and you'll get the next section of the video. So thanks guys, hope you enjoyed this. If you have any questions or want to contact us, check us out at www.triedandtruemortgages.ca. You can email me directly or give me a call. We're located in Hamilton, Ontario. For those who are part of the members, definitely check out the next part of the video. We're going to have some good information on what's happening in the real estate market and how you can take advantage of the real estate market going forward. and sort of get ahead. Thanks, guys. Have a great day. Cheers.